All right, so as an options trader, you usually want to trade the trend, right? You don't want to trade something that is going to look like this as an options trader because this is too emotional, right? This is going to kill your contracts as well. If there's no clear direction and the price of a stock or a ticker is going up, it's just oscillating. There's a there's a Greek for the options contract called theta. Theta means time decay. So no matter what, your options go to zero at the expiration date. And if they're just going up and down, theta will really destroy the contracts and their value because no one's going to want to trade that. Okay, so based off of that, would you rather trade this SPY chart right here or this Apple chart? This is the same day, by the way. This is December 1st, the SPY and Apple chart. Okay, obviously you'd want to trade the Apple chart, all right? Now, a lot of you can't see this, but there is a level here called a previous day. There's a level here called a previous day high. Okay, the only way this trend strategy works is if the stock goes above the previous day high and then it comes back down and touches this level, or an EMA. So an EMA is an exponential moving average. It is what I do to find my exits and my entries and my exits, okay? Especially the 8 EMA. The 8 EMA is where you find most of your entries. The 20 EMA is more of a gauge for where the price is going. Like it's a 8 EMA for a higher time frame, right? So it just kind of shows you that. All right, so let me just give you an example. So we're looking at Apple this day. It has relative strength because it is trending way cleaner than the SPY chart. Because it has relative strength, it is a more high probability setup if we take calls betting it will go up, right? So this is a previous day high. So we want the stock to go above the previous day high and then either retest it, so come back down and then makes a tap, or we want to see it retest the 8 EMA. So obviously we don't get a clean retest on this level, but look what price does right here. It touches the 8 EMA and then it goes nuclear to the moon, right? So this is where you'd want to enter calls, and then you want to sell at a new high of day, right? So if I'm showing you, we're looking at this chart right here. If I'm showing you this and you enter where I show you to enter, you don't know how high the stock is actually going to go. So selling most of your position around here it works. It's very probabilistic. It just saves you a time and hassle. Like, because let's say the next candle, it comes all the way down here and then you lose all your gains, right? You don't know what's going to happen. So it's just a statistic way of looking at this and saving your profits, right? So you're going to sell most of your contracts here, and then you're going to let the rest run up, right? Because you still want to catch this move. I mean, I'd want to catch this move too, but you really have to, like, I would sell 80 to 90% of my position here and then let the rest go along with the 8 EMA, right? The only way to exit here is if we get a close like this below the 8 EMA. That's where you'd want to exit. Okay, but this was actually a clean trend up and it didn't break the 8 EMA, so you could have rode it for the rest of the day. Okay, so, and if you didn't even catch this entry, notice how there's a third entry here, or a second entry here, and then a third entry here. right? So there's multiple entries when a stock is trending. So don't try and chase anything. Do not chase the highs here. All right, just wait for a pullback and then it's going to go up. Wait for a pullback and then it goes up. All right, now the same concept applies when there's a downtrend. All right, so let's say SPY is going down for the day. Right? Say it's going down. And let's say ticker symbol XYZ is also going down, but it's more cleaner, meaning it has relative weakness, and it gives this stock a more high probability setup than SPY. Okay, so what we're going to look at on this stock is for it to break the previous day low or pre-market low, right? What you look for is for it to break and then maybe retest. So a retest would look something like this. A retest would look something like this. Boom, and then boom. All right. Sorry. So this is a retest. All right, we're going to look for the stock to come back up, hit the previous day low, and then go lower. If that doesn't happen, then we use the EMA to find an entry. Right? So here would be a perfect entry to get in for some puts on a stock. All right, and then you sell at a new low of the day. You sell at the lowest point of the day. Now, when I say it has to retest a level, usually the type of candlestick pattern you are looking for is for it to look like this. We want to see a wick to this level, not a body. We do not want to see this. This is a lower probability of happening because this shows that price respects this level. This does not. Okay. This is not what we want to see. This is usually a better indication that it's going to go lower. Same thing for the upside, right? So notice, all right, this is kind of, notice here though, this is what I'm talking about. Notice here, notice how this wick touches the EMA and then it comes back up. There's not a full body, like let's say this candle came all the way down here. This candle came all the way down here and broke the EMA. That is not a clean entry. You'd probably want to not take calls there. Okay? So that is kind of just a beginner-friendly way of looking at the strategy. You just look for a level retest or an EMA retest, and then you just ride it up. It is very simple. So, yeah, now I want to talk about why relative strength and relative weakness matters. All right, we can see Apple this day has relative strength, and stock XYZ has relative weakness this day, right? So if the SPY is the majority of the top 500 companies, don't you want to ride that wave? Okay, but there's a cleaner way to ride that wave than the SPY because since it's 500 companies, it's not going to have a clean trend up or clean trend down unless there's big news. All right, or if it's, yeah. So if there's no like big news or catalyst, then usually you want to find a ticker with relative weakness because it will be a higher probability setup for a stock to continue downwards or upwards. All right. And just puts the odds in your favor. And yeah, that is how you trade my levels in EMA strategy with relative strength and weakness. So if this breakdown helped you, leave a like and drop a comment. Let me know if you want a full video where I walk through real trades using this exact strategy, and I'll catch you in the next one.